Welcome back to the Cuddler Report. At the top of this half hour, a 5-week rally has come crashing back to earth. Oil prices plunging today, dropping below $100 a barrel for the first time since March 16th. So with nearly a 10% drop in oil, has the bubble burst, and where do we go from here on oil and gasoline prices? Here now is former Shell Oil President and CEO John Hofmeister, founder of Citizens for Affordable Energy, and Stephen Schork, editor of the Schork Report, joins us as well. John Hofmeister, it's great to see you, but I think your $5 gasoline price is in great jeopardy right now. We may hit $3 first.
I don't think so, Larry. I think we're still on the march forward. Remember, I said $5 in 2012, and I thought prices from February onward were getting irrational for this year. I'm a supply-demand person. I'm really looking at what is the underlying demand coming out of China, India, and the U.S., and I'm staying with the $5 in 2012.
All right, Steve Schork, where do you come out on this debate?
Oh, well, I've been a bear for as long as I can remember at this point, Larry. We have to keep in mind what we saw today is the adage, markets fall faster than they rise. It took 32 sessions to get this market above $100 to $115. It took 3 sessions to get us back below $100. We were in the midst of a dollar-induced bubble. If the dollar continues to rally, oil this year will continue to fall.
How far? How far, Steve?
We'll go right back to where we started from, 85.95. There was a nice gap. If the dollar continues to go higher, we will fall, and we will definitely, I'm confident, Larry, we will close that $85-$95 gap this year.
All right, John Hofmeister, I'm going to equate $85 with no higher than $3.50 at the retail gas station. I guess you have to trust Ben Bernanke. Do you?
Well, I still admire the Fed, Larry. I'm a little different than you are in that regard, because I think they took us out of a pretty dismal time. But at the same time, I realize there's a bit of inflation in there. We can't let inflation eat our lunch. And I'm not unhappy with the fall in the oil price, because the consumers were getting really, really worried everywhere I've been all over this country.
You know, Steve Schork, it's sort of interesting. I'm going to stray a wee bit. If this is all transitory, as Bernanke predicted, let's say, Steve, your scenario is correct. Let's say it's correct, and I'm kind of leaning towards your scenario. I gave a sermon on it earlier. Then it turns out we may have seen the worst of inflation, we may have seen the worst in oil, we may have seen the worst in gasoline prices, and we may have seen the worst for the economy, the tax on the economy. Maybe that's where this is going.
Oh, absolutely. With oil where we were and what that meant for consumption expenditure, we were talking about a path of maybe 4.5% of our dollar going towards energy. You take this bubble out, and if we do retrace back to the $85 area, well, gasoline prices are going to retrace back to where we were for all of last year, and they were at a comfortable level, a level that this economy could sustain. So, yes, if that dollar, this is all Ben Bernanke, if that dollar continues to rise, this is a very good news for consumers on the inflation front.
All right, John Hofmeister, give you the end of this thing. Boone Pickens told us morning before last, however, that world demand is going to continue to exceed world supply. It's not all the dollar in the Fed. What's your take on that?
I'm with Boone. And that's what I've been saying for the whole time since last December. China's going from 9 million to 15 million barrels a day consumption in 5 years. India's going from 4 to 7. I don't know where that oil comes from.
What if we produce it? Higher prices should lead to more production. What if we produce it? What if there are policy changes that allow the USA to produce more oil and natural gas and, heaven forbid, refine more gasoline, John? Is such a thing still possible?
I spend 24/7, Larry, trying to make sure that that's exactly what happens, that we produce more domestic oil. If we went to 10 million barrels, we create 3 million jobs. The economy's on a tear. That's what we should be doing.
That is just what we should be doing. Thank you, gentlemen. John Hofmeister and Stephen Schork. We appreciate it.